Hi, I'm Michael Wagner, co-founder at Omnia Family Wealth. And look, I got to be honest with you. I've been getting a lot of phone calls this past week about this whole GameStop and Reddit thing, and I thought it would be good just to take a few minutes to just talk about it. So look, hedge funds have been around for a long time. The first hedge fund was probably founded back in the 1920s. But they became a lot more widely known in the 70s and 80s with this focus on what's called a long short strategy. So you've probably heard a lot about shorting stocks, but not a lot of people talk about like what that mechanism is. Essentially, shorting a stock means you're borrowing that stock, selling it immediately on the market, with the hopes that later on that stock's going to be cheaper to buy. So ultimately, down the road, you go out there and you buy that stock when it's cheaper, you return it back to whoever you borrowed it from, and that's how you make money shorting stocks. Now, it's possible that it goes the wrong way on you, and in that case, the losses are theoretically infinite. So that's hedge funds and shorting, right? Just a really brief introduction there. GameStop is a retailer that's been out there, actually traces its roots back to Babbage's in 1984. They're in malls and shopping centers, and they sell or have sold video games and software in physical packages that you go to the mall, you go to the store, you pick it up, and you take it home. So we talked about what are hedge funds, what's GameStop. That brings us to Reddit. So what's a Reddit, right? Reddit launched in 2005, and it's a website essentially that hopes to be, they call it the front page of the internet. Really what Reddit does is it hosts these countless numbers of communities, which are really like message boards organized around various interests. There are ones for sports teams, gaming, video games, right? All kinds of hobbies, photography, birding, and yeah, investing. Right. So people get together, they come on and they talk about basically different trades they're thinking about doing. And a lot of that happens in one subreddit called Wall Street Bets. So it introduces you to some of the players. Let's fast forward to like what's going on right now. Due to coronavirus, look, we all know that we're all at home. We're not going to malls. For the most part, we're not out there shopping. You've also seen this big increase in what we call retail trading. That's just regular, normal people trading the stock market. So with all of this, look, GameStop's business model was already under a lot of pressure. As internet speeds have become faster and faster, fewer people need to go into a physical store and buy software that they then take home, right? We just download it on the internet. So between coronavirus and some secular headwinds in their business, GameStop has become a natural short for a lot of hedge funds. And on top of that, you have this sort of anti-shorting sentiment that's out there. A lot of it is exemplified by Elon Musk, who has a big following on the internet. Tesla is another company that's famously shorted by hedge funds. And so Elon has had this sort of crusade against people who short his stock. And this all started with really one person on Wall Street Bets who actually believed in the fundamental business case for turning around GameStop, that they could turn around their business. They have a new CEO. But what happened was this trade actually became viral. And we've seen stuff like this before. You had message boards back in the 90s on Yahoo that talked about investing, and you would see people kind of get into, group into a trade. But never have we seen a trade become so viral like this GameStop thing has. So it starts with one fundamental belief. Other people on the subreddit then sort of, either also believe that or they have their own reasons for investing in the stock. And they figured out that if they could get these stocks to go up enough, they could trigger what's called a short squeeze in the name. And what a short squeeze essentially is it's forcing people to close out their shorts. And if you recall in my previous example, that basically means you got to go out and buy that stock and return it to the person that you borrowed it from. So that buying to close out your short only drives the price higher and higher. And that's exactly what you saw last week. You can call it a melt up or an up crash. Both are terms that I think, fit the situation pretty well. And that's what happened. You essentially had all of these different forces kind of come together, this perfect storm of anti-shorting sentiment, the ability for this trade to go viral, the ease of doing it from your cell phone on things like Robinhood, and then kaboom, you get this short squeeze, this melt up where the price of GameStop shoots up dramatically like a rocket ship. And that resulted in really billions of dollars of losses for funds that were short that name. Now, this week, you've seen that sort of reverse, right? So clearly, some people are starting to sell out of their greatly appreciated positions, and it's driving down the price. So there's been a lot of mis and disinformation going out there in terms of like silver being the next trade. There's a lot of stuff out there on the internet that you need to be really careful about when you're looking at it. Always consider the source, and really just be mindful of what you're doing and where your information is coming from. As always, we're here to answer any questions you may have. Please feel free to reach out, give us a call, shoot me an email. Would love to discuss this. And again, just thank you for your time today. Be careful out there and always consider your source.